Hello, everyone. This is Cameron Fink, Director of Sales with American Home Builders of West Africa. Today, I'm sitting down with our CFO and co-founder, Bob Hornsby, to discuss the financial qualification process for getting financing for one of our homes. Bob, would you start off by introducing yourself?
Sure. As Cameron said, my name is Bob Hornsby. I am one of the co-founders of American Home Builders of West Africa, and I serve as the Chief Financial Officer, although I wear a lot of different hats, as is common in small businesses like ours.
Thank you, Bob. So today my goal is to ask some of the questions that I get asked every day by clients about what financing means for our company, how one can get financing, and how the whole process works. So Bob, if you wouldn't mind, can you just explain a little bit, what is the financial qualification process?
So financial qualification, I'll back up a little bit and say that, we sell homes, and some of those homes we sell to people who have the cash to pay for those homes while we're building them. So there's a whole process of building in installments where they'll put a deposit down, and then as we hit construction milestones, they'll make their payments. And then at the end of the construction process, a few months later, the house is finished, the payments are finished, title gets transferred, it's all done. Many of our clients don't have the funds immediately available to make those payments during the course of construction. And so for those clients, we try to offer ways to buy the home. And the contrast here is, many of our clients have tried to do this in the past, where they've had to send money over a little bit at a time, and build their house a few bricks at a time over a period of years. What providing financing allows us to do is give them a home now, and then allow them to pay over time, so that they can begin enjoying the house at the front end of that process, and then make their payments over time instead of having to wait until the end of having made all those payments. So in order to be able to do that, we need to make sure that the buyer is actually going to be able to pay for that house over a period of 5 or 10 years, whatever the term of that financing is. And it's important to us to make sure that they can do that. One, because we never want a client to get into a situation where they think they have something that they've been dreaming of, and it turns out that they actually can't afford it. That's bad for them. It's bad for us. It's bad for everybody. The other thing is, in order to be able to offer financing to our buyers, we work with another company that provides that financing. So that company has investors, and we have a responsibility to them and to their investors to make sure that we're not building homes and offering financing for homes for people who aren't going to be able to pay that money back. So we're trying to take care of everybody, in a sense, in this process, by saying, let's do our homework and make sure that that this person who says they want to finance the purchase of this home actually has the resources to be able to do that and pay for it over time in a way that's not going to cause them too much difficulty.
Okay. And this is in many ways like the U.S. system of mortgages. That is, you pay a down payment and can move into your house while continuing to make finance payments over a long period of time. Is this a mortgage?
This is not a mortgage. It is. We write contracts that are called installment purchase agreements, and there are a few reasons that really write mortgages. Some have to do with just you have to be licensed to do mortgages. Another has to do with the fact that the system for taking title to a property, creating a financial instrument like a mortgage that has a lien on that title, and then and have that mortgage be essentially a tradable security, which is what happens, right? In the U.S., when you get a mortgage, some bank may offer you that mortgage, but then they may sell it to another bank. You may find out 3 months later that your mortgage was through Wells Fargo, but now it's Chase that's servicing that mortgage, because and those products get traded in a way that you can't really do yet with properties in West Africa. So for us to be able to maintain a process where control of the title is clear until the person has finished paying that home, we hold on to the title until they finish paying that home, and then we assign title over to them. When you have a mortgage, the title does get assigned to the buyer right away, but there's a financial institution that has a lien on that property, and so the title is really tied up by the bank. And by doing these as installment purchase agreements, it just provides a little bit of a simpler way to deal with the fact that getting land title issues sorted out with a mortgage product would be kind of complicated in the West African context.
Of course, and it's important to note, as I'm sure many of our clients already know, you can't go to Wachovia or Bank of America and get a mortgage to buy a house in Conakry.
Right. Good luck. Yeah, and this is the challenge for our clients, and we found this out with the first home that we sold. The banks in West Africa, for the most part, don't have a lot of appetite for lending to the diaspora, because when banks in West Africa lend, they like to be able to lock in a claim on a person's salary and have that salary paid directly into that bank so that they get their repayment right away first before anything else happens. Well, it's hard to do that if you're dealing with a borrower that lives in Europe or North America or Australia or wherever. And as you say, banks here, there are banks in the U.S. or Canada, Europe that may finance second homes in other markets, but that might, you're talking about a bank that might give someone a mortgage for a second home in France, not for a second home in Guinea or Sierra Leone or Nigeria, right?
Okay.
So that, and I mean, we puzzled for a long time over how to solve this problem, and that's how we ended up getting together with one of our early investors to put together this financing company so we'd be able to do this.
Okay, that makes a lot of sense. Well, one question that people always ask is, what documents are required for a financial qualification?
Sure. We do have a list. I won't go through the entire list here, but I will say, just starting at the high level, what we're trying to understand when we go through financial qualification is an understanding of what kinds of assets a borrower or a home buyer has, what kinds of liability debts that they have, what their regular reliable income stream is, and what their predictable obligations are in terms of spending each month. And by looking at all those things together, we come to an understanding of how much money in general do they have left over each month. And we want to make sure that whatever that number is, that it's more than enough to pay for whatever their monthly fee would be on an installment purchase agreement for one of our homes. Now, to get to that information, there's a number of things that are important. Bank statements that show the flows of funds in and out for that person over a period of a few months. Salary, pay stubs, any sort of information about income. Tax information that gives you sort of a picture of what the whole year looks like for that person in terms of income. We like to have credit reports when they're available. We encourage people to go to their free sites like Credit Karma, where you can go and you can pull your own credit report. But then we work through other organizations to be able to get those credit reports with the home buyer's permission when they don't already have access to it. So it's if you can imagine what are the kinds of documents that I have that show what my financial situation is, what kind of money I have coming in, what kind of debts I owe. All of that information is helpful to us in getting to that point of making sure that we are selling you something that you can afford and that you're going to enjoy for a long time.
Of course, and I think you raise a good point. There is a basic list included in our contracts of the documents we require, but we know that different people are in different situations. We have clients who live all around the world. And sometimes it may be different. We're working with a population that is historically underbanked, and that means that not everyone has their entire income sitting in a bank account or two. Some people have different situations, and we are very happy and comfortable working with people who are in different financial situations, as long as they can prove their ease of making these monthly payments.
Exactly, exactly. And just to give an example, you know, we have some people, excuse me, we have some people that that do business between the U.S. and West Africa, for example, and they may send over shipments of products that then get sold, or they may own businesses in West Africa that generate income. And so these are the kinds of complicated things that your typical financial institution here in the U.S. would really have a hard time figuring out how to deal with. But because we kind of understand our client base, we have ways of looking into that and say, okay, well, if you typically send over 2 containers a year or 3 containers a year, let's kind of look at what that history is. Let's look at what's in that container that's on its way over there now, and we can sense of what those flows look like and kind of even them out, even if it's not all documented as this is my salary every month and it always looks exactly the same way.
Of course, and I think that flexibility, it's really informed by the fact that we have clients who live all over the world. And I just finished up making a video that has sort of a tour of the world, showing all the different places where our paying clients have lived. And that flexibility, you know, the process of going to a bank to get a loan in another country, in Australia or in Canada or France, is different than that in the US. But for our company, we have sort of a set of information that we require regardless of where you live, and we're flexible about how clients show that.
Absolutely. And just to follow up on what you said, it is also true that that clients can sometimes find financing through banks in their home country on better terms than we can offer through our partner financing company. Particularly, we've seen this particularly in Europe, where interest rates are so low. When people in Europe have access to getting personal loans at a bank at very low rates of interest, we always encourage them to do that, because that's going to be a more affordable way to get their house than to use the installment purchase agreement contract that we have. And so we try, you know, through this process, we're trying to understand the client and make sure that we're protecting them and protecting the investors who are going to fund this housing finance. But also we try to educate people to say, look, you know, we want you to have this house. We want you to be happy with this house. We want it to be as affordable for you as possible. So, you know, whenever it looks like someone has access to, perhaps, you know, if they have a lot of equity in their home here in the U.S. already, and they could tap a home equity line of credit at a low interest rate to be able to do that, we'd encourage them to look into that. If they live in Europe and have access to personal loans from banks there at low rates, we encourage them to look into that, because at the end of the day, you know, what's good for our customers financially is good for us too.
Of course, and I mean, it's worth that our company is American Home Builders of West Africa. Our focus is on building homes, and of course we do offer financing to clients who need it, but it's certainly not required. It's not, you know, like you said, plenty of people do not need financing through us, or they prefer to work in cash, or, you know, we're very flexible in terms of those payment terms. Sure. So let's get back into the financial qualification process a little bit then. Many times clients will open up the document and see, you know, 6 or 7 pages of required information about their personal finances, and they want to know, what is this information used for? Why do I have to provide it all? Who will it be shared with? These are very important questions of privacy that I think are essential for all of us to know about. Can you explain a little bit of that?
Sure. I will say that the only people that have access to this financial qualification information, the internal sales and accounting team here at our company, who are responsible for gathering and analyzing that information. And then when we put together a financial qualification application and present it to the financing company that we work with, we make a summary of that information available to them as well, so they can evaluate do I really want to provide the financing for this client for this home, given all this information? We do not share client information externally with anyone else, not for marketing purposes, not for any purposes. We take that kind of privacy quite seriously, and not just because from a regulatory standpoint we have to. We think it's important to be respectful of people's privacy. So we are only ever going to ask for information that we feel is necessary to understand that the client can actually afford to make this purchase and is not going to put themselves in a bad position by taking on this obligation, and to make sure that on the other side that the people investing in this to provide this financing for the home buyer, that their investment is going to be secure. And this goes back to the very first one of these that we did. In 2015. We came up with this way of offering financing through these installment purchase agreement contracts, and then finding someone who would invest in that so that they could have a claim on those payments. And the first person who invested in that was my mother, and so our a lot of our mindset around how we make sure that people are not going to get into trouble is about wanting to have happy clients that are going to be in their homes for a long time and are never going to be upset about losing that home because it turns out they couldn't afford it. But it's also about protecting people that we care about who are putting up the money to make that housing available for people. Now, there are now in the financing company that we partner with to offer this this financing to our home buyers. There are many people invested in that company that I don't know, that I've never spoken to, but that spirit of wanting to protect their investment is also a big part of what we do. We don't want clients to get in trouble and get underwater with their obligations, and we never want investors to be in a position where they're taking a loss on something that we told them was worthwhile.
Of course. And in terms of assessing, like you said, whether or not financing is worthwhile to offer, a question I get all the time from clients is, as you mentioned already, the credit report. Obviously, we do ask for it, and it may be a required document depending on where you live. But many people assume that, like in the U.S. mortgage process, it is the most important document, that score, that single credit score, is the only thing that really matters in terms of getting financing. Can you address that a little bit?
Sure. I will say that credit scores can be useful information to us. They are rarely the most important they're almost never the most important piece of information for us. If someone comes in with a very high credit score, that is useful information, and that tells us something about them. If someone comes in with a low credit score, that may or may not tell us something useful about them for the purposes of qualifying them for a purchase of our home. And the reason is, there are lots of reasons someone can have a low credit score, and it may be because they have a history of not being able to cover their obligations. It may be because they have a history of not making payments on the debts that they've incurred. It may also be that they just don't have a history, that they've never taken out a mortgage, that they've never taken out a credit card. And if you don't have a history, you can't build up a credit score. So, right. So for people on that end of the spectrum, I would say, a low credit score does not at all mean that you're not going to be eligible for financing. It may mean that we want to ask you for additional documentation so that we can get a better picture of what your financial situation is. But the system in North America that revolves around analyzing people based on credit scores is a very numbers-driven system. that doesn't really contemplate individual circumstances or cultural differences in the way that people deal with money, or things like that. I've written actually about sort of the difference between how we do this for the way that we sell homes, and how people are sort of turned into numbers in the American system now. And for us, it's much more like banking used to be done in the 1950s in a small town in middle America. We're trying to get a real understanding of who this person is. What is their involvement in the community? What is their financial health? What is who are they beyond that number that you might see on a credit score, and what does that mean for how they're going to be able to manage making payments for this kind of house?
Of course, and that leads me to think about another difference that our system has from the, like you said, the sort of North American credit score system, which is for many of our clients who need more than a month or two to pay their deposit, we have this extended down payment program where we give clients up to 24 months, interest-free, financing cost-free, just to pay their down payment before we actually start construction and move ahead. So can you talk a little bit about how, for clients who are in this extended program, how that 24-month period can be used to sort of strengthen their case for financing?
Absolutely, it's a great program, and for a number of different reasons. As we said, that not everybody that we sell a home to has the funds available to pay for that entire house over the course of construction. Not everybody has the funds available to make a 30% deposit in the space of a couple of weeks, right? And so we have this program where people can build up that deposit over time. And one of the great things about it is, if we come to, when we get to the end of that process and the person has put in 12 months or 18 months or 24 months of making regular payments to build up a 30% deposit, that we have collected the other financial information about what their monthly payment stream looks like. We put all that, if we have a credit score, we'll put it with a credit score. When we put all that information together and take it to our financing partner, U.S. Africa Housing Finance, and we say, here's this client, here's their financial situation, here's what their monthly cash flow looks like. Oh, and by the way, they've been paying us regularly for 2 years this amount of money, which happens to be a little bit more than what they're going to be having to pay us going forward. It is a great illustration of the commitment of this person to making this this arrangement work, a commitment to having that house and keeping that house, and a clear demonstration that their ability to pay is not just something we've analyzed based on the documents that we've looked at. We've seen them pay month after month after month after month, and that is a really compelling story to bring to someone who's thinking about offering financing.
No, that's great. So I think we've sort of covered the basics of what the purpose of the financial qualification process is, what the process actually entails, that is filling out forms and providing documents, and how it differs in some ways than the typical U.S. mortgage process. Right. Is there anything else you'd like to touch on before we wrap up?
Off the top of my head, I can't think of it. I will say that we are always looking for better ways to make homes affordable for our buyers, both in the diaspora and those living in Guinea. We're always looking for good partners to be able to expand the ways in which we offer that financing. So our hope is that whatever we have available today, tomorrow and next year and the year after, that we're going to be able to do more and more. We're constantly talking to banks in the region about making more financing available to buyers in the region, and constantly talking to other financial partners in North America and Asia and elsewhere about how to increase that pool of funds that are available so that we can do more programs like this for more people, because it's people really many people really want to have a home back in their home country, And many people have been disappointed at not having access to financing and being stuck in this system of having to send money over year after year after year before you see any kind of structure that can even begin to be called a house, much less get to a point where you have a finished structure that you're happy with. And so being able to give people access to that so that they can enjoy that house and then pay it off over time really makes us feel like we're getting closer to achieving what we set out to do. So we just hope we can keep doing more and more of it going forward.
Well, that's great. Yeah, I was interviewing our CEO about the new Washington bungalow model, and we were discussing how that design was influenced and very much driven by the desires of our clients, of what they're looking for in a home. And I think we can say the same thing about the financing process. People wanted a longer time for a deposit period, so now we have 2 years. People need access to financing, so we can offer 10 years of financing. People need a qualification process that is more diverse than a simple credit score. So we have a variety of options that can allow clients to receive financing. I think it really just shows how every aspect of our company is driven by the needs and desires of our clients for an affordable, high quality house back in West Africa.
Absolutely. Yep. Yeah, I couldn't have said it better myself.
All right. Well, thank you very much for your time, Bob. And please, if you have any questions, our information is below. Give us a call and we can discuss all of this in more detail.
Thank you.